Welcome back to Udomo, and Trendias is now called Udomo. And I wanted to talk about Adobe and Duolingo stock in this video and review their financial statements and talk about my opinions on these two stocks. So I could easily look at financial statements by going to udomo.com/atlas-simple. So this is going to show me a simplified version of financial statement data, and I can plot line items here. And for Adobe, let's just look at their top lines. We could look at gross profit, net income, operating income, and revenues. And from the surface, this company does not seem to be impacted by AI, just from a bird eye view. We have revenue and gross profit increasing year after year. In 2024, they had revenues of 21 billion, net income of 5 billion, gross profit of 19 billion, operating income of 6 billion. And in 2025, these numbers get even better. The financial highlights: 23 billion revenue, which is 11% year over year growth. They also had annualized recurring revenue of 25 billion. This is up 11.5% year over year. Operating income 8.7 billion, net income 7.13 billion. Adobe generated 10 billion in operating free cash flow, this year, and then repurchased approximately 30.8 million shares during the year. Adobe's buying back their own shares, which is great for the stockholder because there's less supply of shares in the market, which increases the price. We also had a great fourth quarter 2025, record revenue. This is record revenue, the most revenue they've ever made in a quarter, in a single quarter, 6.19 billion. Represents a 10% year over year increase, and the list goes on and on. They repurchased 7.2 million shares in that quarter alone. So these numbers are looking good. We can even plot financial ratios. So I am going to plot price to sales, and the red line shows me where Adobe typically trades on average throughout the years. So here we could hover and see average price to sales was at 13, and price to sales in 2024 was at 10. So Adobe traditionally on average trades at 13. So investors are on average willing to pay $13 for every dollar in revenue Adobe generates. But now in 2024, investors are only willing to spend 10. And this number is even lower today because we take Adobe's market cap, which is 129 billion today, and the 2025 full year actual revenue generated was 23 billion. And this leaves us with a full year price to sales ratio of just 5.46, when on average Adobe trades at 13. So just to bring the message home, I'm going to bring the message home, and Adobe right now is down here. It's trading at 5. This is where Adobe's trading at. This is 5. All the way down here. We're not even on the chart, right? It's not even on the chart. We're all the way down there. So we currently, the market is only willing to pay $5 for every dollar in revenue Adobe generates, when on average trades at 13. We're all the way down here, right? Now, the AI fears are certainly valid. I can agree to some sort. There's amazing things you could do with Sora. You could create videos, you could create images. Google Gemini has an amazing photo editing and video creation. You know what I mean? So like there are certainly valid concerns that AI is going to take some market share from Adobe. To that counter, Adobe has been investing a lot into Firefly, which is their AI response, right? So within the AI of Firefly, you can ask it to, create images and whatnot. Simultaneously, the pro about Firefly is that you're already in the Adobe ecosystem with Firefly. So Firefly can generate an image for you, and then with the Adobe tools, the legacy tools, you can edit the photo, you could brush it, you could do touch-ups, do add-ons, instead of having to ask the AI to edit and regenerate the image, hoping that AI understood what you said, right? AI is very helpful to get you started, and Firefly can be that AI model within Adobe ecosystem that creators can get started with their creative venture. And then with the Adobe legacy products within the same ecosystem, they can edit and make changes to that AI image. So that's kind of like the play of Firefly and how it combines legacy Adobe products with the new AI model. Another big concern for Adobe is Canva. Canva is taking market share, and I can attest to this. I use Canva myself. I don't need a professional suite of products for my budget and for my needs. So for my needs, it's different. Simultaneously, though, for consumers like me, Canva's easy entry. Canva, I could log in anywhere. So quite frankly, I would be more concerned about Canva taking away market share compared to Adobe having to compete with AI being the main fear. I would say Canva is more of a threat compared to AI. Adobe is answering the AI movement with research and development into Firefly. Now they just have to answer the increasing competition from companies like Canva. Simultaneously, even with those fears, we could potentially argue that the market is already pricing in well enough these Canva and AI fears. These new competitor and AI fears taking away market share is very much baked into the stock price right now. On average, price to sales is at 13. Now we trade at 5. I could look at other financial ratios. I could look at price to gross profit, and price to gross profit 2024 was at 12. On average, it was 15. So we're at a discount in that regard. I could look at the net income, price to net income, and I'm going to flip the colors back so that it doesn't get confusing. So check this one out, right? Price to net income on average used to trade at 47. In 2024, price to net income was at 41. And this should be GAAP. So if we took net income, we're trading at 18 now because 2025 full year GAAP net income was at 7 billion and we're at a 129 billion market cap, so that's 18. So once again, we're all the way down here in terms of the fundamentals compared to the market cap. And we'll get 2025 figures into Udomo Atlas here soon. So from a valuation perspective, yes, Adobe has some conviction to answer in 2026. 2026 is going to be a big year for Adobe. It's going to have to answer, what are you doing with new competition like Canva? What are you going to do about AI potentially taking market share? Simultaneously, we can go back to the top line items. So let's look at revenue, operating income, net income, and gross profit. Adobe is increasing their research and development, like their deployment of Firefly, which is their AI response. So you see this dynamic where revenue is increasing year after year, which is good. But then you have the operating income sort of flatlining relative to the pace that revenue is growing at. So there is some concern there with, they're calling it freemium, where the goal is to capture the attention of as many consumers as possible with good but free products to try and nab them into your ecosystem. And the idea there is to try and develop a habit within people, right? You offer something for free now, and then maybe you add some features, and then you say, hey, by the way, you seem to love this Firefly, you seem to love this product. We added some extra stuff in there. We think you'd enjoy it. It's this much in subscription, right? So the freemium is to try and gather as much people as possible. And Adobe stock has been getting penalized because of this freemium movement that they're doing. And I understand because, freemium doesn't offer immediate revenue generation. But simultaneously, OpenAI has a $300 billion valuation, but they burn money like there's no tomorrow. OpenAI right now is not a profitable business. So if Adobe does it and offers freemium, then they get penalized and the stock price goes down 30%. But if OpenAI offers, free chats and image generation for free, they get a huge valuation and the valuation is not penalized. So just some thought there where the market is penalizing Adobe for not being innovative enough because AI is going to take over the market share. But simultaneously, when Adobe increases R&D to answer the AI issue and to offer free products that consumers can try out, and to make sure the market doesn't forget about Adobe, customers don't forget about Adobe, they also get penalized for that too. So it's kind of like a lose-lose situation for Adobe where either they just stay status quo and do nothing and the stock market penalizes them for that, or they offer free products and try to re-engage the consumer and develop habits in the consumer to use their products because it's free, and they're going to spend more on R&D on Firefly and AI, and we're going to penalize that too. So again, the valuation is very cheap on Adobe relative to its historic self. And sometimes in the market, you want to look at the stocks that almost no one wants to own, because that's where potential opportunities lie. And a great example of that is Google. So I could type in Google and I could see the annual price to sales of Google. And we could see, this legacy company. I'm going to do quarterly actually, so that I could get more data points. But in essence, we have this great legacy company where the stock price was beaten down in 2025, especially spring, because the stock market was concerned, oh, Google's going to be the next eBay. It's going to become obsolete because why would I Google anything when I could just ChatGPT it, right? The market was so heavily pessimistic about Google that the market forgot about, hey, Google owns YouTube, which has more watch time than Netflix on TVs. Hey, we forgot that Google owns Google Cloud, which is growing in like 30 percentage points. Hey, we forgot Google has Waymo, which already has driverless taxis on the road well before Tesla had rubber hitting the road. And we forgot that Google search generates like $50 billion. So much pessimism in the market swayed the Google stock price to a cheaper valuation. And we could easily see this on udomo.com, where price to sales of Google in 2023 was at 20. Average price to sales is at 23. Same thing in 2025. Price to sales was at 21. Average price to sales is at 23. So these two instances in time, Google was trading at a discount relative to price to sales. And, we can look and see historically, was this a good time to buy? And we go to 2025. We were looking at March. This is around this time was exactly when the news broke out that Apple said, hey, Google search is down in Safari, right? That day was the best day to buy Google in recent history. And as you can see, Google stock is up. This circle right here, we found out, hey, price to sales is at a discount. And Google was indeed trading at a discount. And I had videos talking about Google during that time as well. So check that out in the top right. Google since then is up 116%. So that would have been a great time to buy Google. Another great time to buy Google was June 30th, 2023. Google's a high quality company generating cash and revenue. So June 30, 2023. Let's look at that. June 30, 2023 was around here, right? June 30, 2023. I mean, you could go to February 2025, Google was up 71%. So you have instances where the stock price is trading at a discount when the fundamentals are strong. Those are the opportunities that you want. And I think we see that with Adobe. I think that is what, at least that's what I'm saying. So again, let's go back to Adobe and let's look at their price to sales once again. And now this is quarterly price to sales. So let's look at March 2023, price to sales 33. This is quarterly, by the way. Average price to sales 47. So March 2023, let's check that out for Adobe. March 2023 was right here, right between the valley of this price action. And then let's look. If you went from March 2023 to this peak, that would have been a 77% increase. If you have stocks that are trading at a discount, but their fundamentals are strong, obviously it doesn't work all the time. No trading strategy is foolproof. However, in my personal opinion, not financial advice, but invest in high quality companies that generate revenue, generate net income, generate free cash flow. Ideally, that free cash flow, that revenue, that net income goes up and up and up and up every quarter, every year. Easy trajectory to the upside, very easy to predict companies where the revenue, the free cash flow goes up. And that's what we're seeing with Adobe. They make revenue and it goes up every single year. So I did talk about Adobe a lot, and this is kind of a freestyle video, what's on my mind. But yeah, let's look at Duolingo this time, and I'll do annual for Duolingo. Let's look at their revenue. Let's look at their gross profit. Let's look at their net income. Let's look at operating income. Same story, right? This company generates revenue. They're good at generating revenue. Annual 2024 revenues of 748 million, net income of 88 million. These are good numbers. Now the stock was down like 7% most recently because of the departure of the CFO. And with that departure, they provided some sneak peek to the fourth quarter 2025, and we could see that daily active user growth was 30% year over year, and bookings is slightly above the previously announced guidance range of 329.5 million to 335.5 million. So, the stock market got a little suspicious because, hey, CFO's leaving. CFO's like responsible for all the numbers. The CFO is all about driving the business to make it profitable, and they're leaving. That could be a red flag. So investors were a bit scared of that. However, with this little tidbit from the Duolingo CFO transition press release, these are promising numbers. The growth of 30% year over year on DAU and bookings is also up higher than the previous announced guidance. So far, sounds pretty good. Simultaneously, we could look at the quarter four and full year guidance that was previously provided. And I got that into my spreadsheet as well here. And we could see Adobe right here. Adobe full year is trading at a 7.45 price to sales. So knowing that, let's check out what Duolingo's annual price to sales looks like. So on average, Duolingo trades at a 14 average price to sales, but Duolingo now trades at a 7 price to sales, 7.45. So again, just to drive home, I'm going to do my, This is why I'm not an art student, because, well, I I do enjoy art actually. I do some painting on the side, but regardless, regardless of the point, right? We're trading not even there. Like we're trading, yeah, right here. You know what I mean? Like this is 7, right? We're not even on the chart anymore. We're trading over here based on the guidance and on the transition press release. They seem to be hitting the marks. But again, look at this company. They grow revenue, they grow net income, they grow at 30% year over year numbers. That is great. On average, they trade at a 14 price to sales. Now you're at 7. You're at half the value it traditionally trades for. We're not even on the chart anymore. We're all the way down here, right? So, let's look at the quarterlies, right? I think the quarterlies help get a better grasp of these numbers here. But let's look at gross profit, revenue, operating income, and just these are great numbers. In 2023, their operating income was in the negatives. 2023 was a big year for them. They broke and became positive. They broke out of that and they became operating income positive since. That is a great trend to see in a company. And you're seeing revenues grow quarter after quarter after quarter. September 2025, revenues of 271 million, gross profit 196 million, operating income of 35 million. And let's plot the stock close price on the secondary axis, right? See this purple line, right? Revenue's going up, gross profit's up, operating income's up, but then the stock price goes down. And the stock price back in September was $321. Now Duolingo is trading at just $165. So Duolingo's all the way down here now. It is all the way down here in the 160s. So let's look at the quarterly price to sales. Let's look at that. Now, this is quarterly, by the way. So the numbers are different compared to the annual. On a quarterly basis, the price to sales on average trades at 57. Given that the revenue guidance is at 273 million, that quarterly ratio is now at 28. So we are way down here. Now let's look at the stock price and notice how when the stock was trading below this average, it was a good time to buy. 2024 was also a decent time to buy. And now potentially we're faced with the same opportunity where sentiment in the market is negative because of AI taking away market share from Duolingo. Some people are also arguing if I could just use ChatGPT to translate, I could ask Google Gemini to take a photo of a menu when I'm traveling internationally. And then Google Gemini will translate what's on the menu on my phone. Why should I need to learn a second language? Right. And to that, I'd say part of Duolingo is not just a way to get things done, but Duolingo is also for hobbyists. Duolingo is for people who genuinely want to learn a language. But simultaneously, one could also argue which one looks more professional. Like maybe if company A is in, America and company B is in Korea and they need a translator, which one looks more professional? Oh, hey, Korean company, we love doing business with you. Oh, hey, by the way, I don't care about right your language and your culture enough to learn it or to hire someone to learn it. So I'm just going to give you an AI chatbot to talk to. Instead of talking to a human, you're just going to talk to this chatbot, or you're going to talk into this phone to translate. So you could argue like, well, it would be good to learn a second language because that looks more professional. That shows you care or what have you. Other people are going to argue for, hey man, just use the AI chatbot. It's cheaper compared to hiring a human. So that there's that argument. Simultaneously, Some people genuinely want to learn a second language because they're interested, because that's their hobby. They want to learn other languages and cultures. And you can't fulfill that solely with AI, right? So there's multiple ways to look at it. The way I'm going to look at it is by looking at the financials. That's the way I'm going to look at it. And for now, all these lines go up, and from the bird eye view, revenues up, gross profits up, etc. Sometimes opportunities lie in the stocks that almost no one wants to own, right? Think of Google when it was in the 150s. Now it's at 350, and I have Google, but I'm like, man, should have bought more. I almost like every day I'm like, man, I should have bought more. But I'm glad I bought, and I should be grateful that I had a position to begin with. But anyway, those are my thoughts on Adobe and Duolingo. To sum it up, you can check out udomo.com/atlas, and you can see annual and quarterly financials. To sum up, Adobe recently, Q4, they had record-breaking revenues of $6 billion in one quarter. They're a revenue-generating machine. Duolingo is the same way. They are generating revenue. They're increasing in the 20-30%. They have high growth potential. However, they're facing some headwinds because of AI and new competition. However, simultaneously, when we look at the financials, when we look at these numbers, we don't see depressed companies. We don't see challenged companies. We see companies growing their financials. The AI concerns are very much valid, right? Why should I use Adobe when I could just ChatGPT an image? Why should I learn a second language when AI can translate it for me? Those are very valid concerns. And I don't have a crystal ball. I don't know what the future holds. I could be totally wrong. Simultaneously, from bird's eye view, looking at the financials and the fundamentals of Adobe and Duolingo, I do not see companies in dire needs. I do not see that. Adobe, just to drive it on home, like I'm just going to show the price to sales again. But average price to sales, you have a company that is trading like at 5 when on average it's 13. So this could be a good opportunity. Leave in the comments down below what you think about Adobe and Duolingo. Again, these are high risk because not only, A, it's an investment, but B, these are some battleground stocks. These are stocks that people are very divisive on, and rightfully so, because, at the end of the day, who knows what the future holds. However, looking at the numbers, these stocks, they generate revenue, they generate cash flow, and I like companies that generate cash flow. Check out udomo.com for stock analysis tools. We have the Udomo Atlas. You could check out line items, financial statements. I'm adding price valuations like price to sales. I want to add EV to EBITDA and some more valuations. So, leave down in the comments what you would love to see in a stock analysis tool. We also have the Udomo Fund, and thus far, year over year, the Udomo Fund has returned 57% compared to the S&P. SPY only up 17. And pro members, if they scroll down below, they can see my stock positions in that portfolio. So check out udomo.com. I appreciate you watching till the end of this video. Like and subscribe if you enjoyed the video. Share it with your friends. Share some stock trading ideas. Comment down below what you think about Adobe and Duolingo. Thanks for hearing me ramble, and I will see you all in the next one.